You haven't sent us the video. Isn't the first video that we've been using? Oh, no, no, no. They have to do that one. Oh, okay. So it's just which one? And this one is. Jesus, Aaron, what is this? Alright, well, thanks for joining me today. We will be live shortly. Just standing. My hair looks so high. Are you sure? I will tell you this. It looks so high. I'm ready for you. It's fun, no? Is it fun? The podcast conversation is that industry hot topics. No, there's no hot topics this week. It's just the podcast. Oh, yeah. Ready? It's gonna be just roll up video.
Hi.
This is nice.
This is
Isn't
nice.
it?
It's different.
It's different. Yes, we're in a new location today, guys. So welcome back. I think
Welcome.
that's our motto. Welcome back. So this week, as you can see, the title is a bit controversial, and we're gonna have some deep conversations today. We're gonna get into some truths, and we're really gonna hear our opinions about the UK tax system. But before we get into that, I want to welcome everyone to Accounted Live this week. If you're new here, welcome.
Welcome.
Nice to have you on. So if you don't know, Accounted is a fully licensed accountancy and business advisory firm. From that, we built the Accounted community, which from that, we've built Accounted Live. And it's a weekly podcast where we delve into conversations surrounding accounting and finance and personal development as well. So it's literally like a podcast from your favorite accountants, hearing about our journeys into leadership, our journeys into the industry, and how we are advising you to get to where we are. So stay tuned. Again, we'll speak about business, we'll speak about accounting, we'll speak about loads of different things. So make sure you subscribe, turn on the notification as well so you don't miss out on any of our videos. If you're not already, follow us on our socials, Instagram, TikTok, both of our LinkedIns. But yeah, so we're going to get into the conversation just after this video. Hi. So I think this week's conversation kind of follows off the back from last week. So obviously, if you weren't on last week, we were speaking about women in leadership, and we spoke mainly about the inequalities and women that struggle to get into leadership positions and how difficult it is once they even get there, the difference between them and a man. So I think from that, I think the conversation today kind of stemmed from our client. So one of our clients came to us, and he was just speaking about his kind of distress within working in the UK. He's been been able to reach a certain level of his career where he's very, very successful. He's quite senior in his company, which means he's making quite a bit of money. He does have a business alongside that. So he was actually coming to us for self-assessment filing. And I think he was quite distressed because he realized how much the UK tax system is taken from him. As much as he's been able to make so much money, he's not really seeing it in the way that he thought he would because of how much the UK tax system is taxing. And I think that started our conversation. And I think there was a video that we had that we watched earlier, and it was literally loads of people just speaking about, okay, is the UK tax system made to make us broke, or is it this? It was literally like a compilation video of all of that. And that kind of stemmed our conversation this week. And we thought, okay, do you know what? Let's actually speak about this and address this issue, because I feel like it's something that a lot of people have in the back of their heads, but it's never really something that's addressed head on. So before we even get into asking those questions or answering the title for today, I think it would be great if we can actually understand what the UK tax system is and what it actually means. So I think I'll let you delve into that. Give us like an overview, because obviously it's very, very complex and there's so many nooks and crannies to it. But just a brief overview as an individual working in the UK, or even not even working, just an individual in the UK. How does the tax system affect us or affect you?
Okay, so as we said, the UK tax system is quite complex. It's made up of different bands, and in these different bands, you're taxed at different rates. So we first of all have something that we call a personal allowance, which actually is an allowance that you are given that's completely 0% tax. So you do not receive any tax whatsoever on this. So
how much is that again? Sorry.
So it's 12,570.
Okay.
And that is completely tax free. So you literally times it by 0 and no tax is paid on it. From that 12,500, we then go into what we call a basic tax rate, and that basic tax rate is 20% of what you're getting paid. So it will be from your 12,570 up to about 50,270.
Yeah,
will be taxed at that 20% rate.
Okay.
And then after that, you then go into a higher bracket,
right?
And that higher bracket is from 50,000 up until 125,140 or something like that.
Yeah.
So it goes up into that, and you're taxed at 40%.
Okay.
So
that's
again,
a big jump.
Yeah, it is a big jump. So you go from 25% and then you go to 40%. But then after 40%, after that 125,000, you then reach 45% tax, where you now start paying 45% tax on it. However, it's not like, okay, if I'm making 100k, my whole salary gets paid, charged at 45% or 40%.
Okay.
So it's like, okay, so it's literally what we would do if let's say someone is on about a 60k salary. How we would calculate that is we'll do 0 to 1,000, 12,570. So there's a lot of numbers. So, yeah. I might find myself tripping up. So 0 to 12,500 will tax at 0. Then, so we're saying a 60k salary, right? Yeah, 60k. So, and then from the 12,000 to the 50, we'll charge that at 30%, and then 25%. Then after the 50, we will charge the excess, the 40%. Right. So it's not like the whole salary.
It's just the
excess charged. So it's the excess.
Right.
However, whenever you hit that 100k as well, you basically then start to lose your personal allowance. So for every £1 you make, you lose £2 of your personal allowance. So by the time,
and that's over if you make how much?
If you make over 100k.
Okay.
A year.
Right.
So if someone is trying to work it out, it's gonna be based on your yearly salary. That's what allows you to know what tax bracket you fall into. So once it goes over that 100k, you start to lose £2 for every £1 you make. So then by the time you hit about 125,000, you've essentially got no more personal allowance. So now your whole salary is being taxed.
So, and this applies to sole traders as well, correct?
So so this applies to sole traders, self-employed people. So I would say there's two different types of tax. So there's people who are taxed as a business. So there's corporate tax, and then there's individual tax.
Yeah.
For corporations, they get taxed at a different amount. For individuals, whether you're a sole trader, self-employed, if you do not have a limited company, you still pay income tax. So you don't pay corporate tax because you're a sole trader.
Right.
You would still have to pay income tax on whatever tax
you make,
or whatever money it is that you make.
Okay.
So for that reason, I think it's really common for accountants to actually like advise people. It's probably better for you to be a corporation, a limited company because of those tax implications. However, if somebody's not making any money or like they don't have another job, then and they're not making over like 10k in a year or 12k in a year, sometimes you would tell them say as self-assessment because that would fall into your personal allowance.
Yeah,
but that is very unlikely.
Yeah.
So more time you will kind of give them that advice. Okay, yeah, you might as well register as a corporation, but then with being a corporation, there's also a lot of administrative costs that come with that.
Yeah.
And then if you're now reaching the VAT threshold, you're going to start paying VAT tax. And then on top of that, you may start now pay. Like there's so many taxes.
There's a lot.
It's not
There's a lot
as straightforward as we want it to seem at all.
Okay. So I think now that we've understood what the UK tax system is and what it actually does and how each individual falls into that, I think we can go in to address the question that is our title today. Is the UK tax system made to keep us broke? And I mean, having said that, there's a lot of arguments when you read things online about, okay, yes, it is. And some people say, no, it's not.
Yeah.
And et cetera, et cetera. And I think one of the things that, obviously, I was reading an article and it was speaking about the fairness of the tax system. And it was saying that those that fall into the higher and additional rate brackets, it's fair for them to pay higher because they're wealthier, so they should have a higher share into public services and welfare programs, all that kind of stuff.
Someone said, what if we don't want to pay tax at all?
I think we'll get into that conversation.
We'll get into
we will get into that.
Your tax, the tax that you have to pay, but essentially everyone has to pay a bit of tax. It's
I think one thing that we realized in the UK, there's no avoiding it. HMRC know everything, like all the information that they ask you to declare, and they know it already. They just want you to also,
I mean, they don't know it, but
it.
they have a lot more power than they actually push on people. So for example, people like, okay, so I think I watched in a video and someone was mentioning, okay, like side hustle tax. Now they would go straight away to eBay and actually see how much you've been making off of eBay. So they kind of cut out the person in the middle. But the truth is, they could have always gone to eBay. Like it wasn't, it's not a new thing. Like they could have always gone to eBay. HMRC can actually just ask you for 6 years worth of your income. Like they can just come up and pop up and do an investigation. Like they can do that.
They have the power
so
to
they
do
have
that.
the power to, but essentially there's so many people in the UK. If they're really going to do that with everyone, then they would be wasting so much of the tax that they're actually making, if you understand what I'm saying. So essentially, is the UK tax system here to make you broke? I would probably say yes.
Okay. But then one of the arguments was that the wealthier, if they have the more money, they should pay more. They should contribute more to society because they've been able to acquire a certain level of wealth where they can actually give back.
I mean, but then we can't say that because essentially, if you are making more, then you should be able to lose a bit more money, or you should be able to.
But if we actually look at it, though, it's not them losing
that's
a bit.
What seems moral. That's what seems moral because
is morality always right there?
Yeah, we can probably argue that. Someone said so. It's better that we leave the UK. So I think we were having a conversation earlier, and they were saying, "How can you avoid to pay tax?" And I was like, "Yeah, move out of the UK."
Honestly.
However, I did also say that if you were actually able to get rich in the UK, I think you'll be able to get rich anywhere else. So
Why do you say that?
because I think the UK is one of the hardest markets to break into. From my perspective, it's like, it's like
basically
you're being punished for being rich. Like,
and that's
the tax system. We're talking about employees, but businesses, as much as they don't pay as much tax as employees, they pay heavy taxes as well. Like, let's be real, they pay heavy taxes. Once you hit the 95k threshold, you're gonna start paying VAT. Once you're making enough to start paying VAT, you're more than likely gonna need an employee. So you're then gonna start having to pay PAYE. You're gonna have to pay NI. You're gonna have to pay someone's pension. You're gonna have to pay. So there's so many things that you would have to pay for, whether you're an employee or a business owner. So I do feel like if you do get rich in the UK and you're able to become a millionaire in the UK, personally, I think if you go anywhere, you more than likely will be able to repeat that.
And I think one side of the argument was that, okay, if you're wealthier, you should contribute more and stuff. But another argument was saying that, okay, some of these things that we're contributing to is things like job seekers allowance. It's things like benefits.
That always comes up, doesn't it?
Benefits. So you can see it as, okay, I've probably gone to school, or I've spent years building my business. I've spent years trying to acquire a certain level in my career. To be able to be comfortable, to be able to have the money that I want, but I'm being taxed. And let's actually say it like it is: 45%. If you round that up, that's about 50% of your income. You're basically giving half of your yearly income.
There's actually a part that I didn't mention.
Okay, go on.
Okay, so when you do reach that, like, 125k upwards, it's more than likely that you're actually working for a corporation that's likely to maybe give you accommodation, give you like a vehicle, give you bonuses.
And so benefits for working.
Benefits. So we call that benefits in kind.
Okay.
So then you can say that you're being compensated for what you're losing in tax. Well, but what many people don't know, so like many people, like, they get this really good job, they want to work for a Magic Circle law firm, they get to this point where they're making 150k a year, and then now they've decided, okay, I'm gonna get a bonus, I'm gonna take out a company car, I'm going to use my gym membership, I'm going to do many different things. What little do people know that actually when you start to file your self-assessment, so if you're making over 100k, it's actually compulsory that you file a self-assessment, so you have to. And those things that you're getting as additions, so that accommodation, that company car, actually those get taxed too. So they get taxed too. So
let me get
not
this
just
straight.
your money.
Let's just be clear so that we all understand the level of conversation. I'm making over 100k. My company has said, okay, you have the ability to take out a company car, to have accommodation, all those extra things I'm being taxed on. Why?
Because it all has monetary value. So how HMRC see it is that these things are not gifts. They're still like luxuries of your job. So it's almost like this is it's a monetary payout. So essentially, they will actually tax you. So sometimes, like, if you make payments towards your car, we may make little deductions for the payments that you're making, but they will still pull something out of there. So some of you was even saying that it's discouraging.
And that's what I wanted to make the point to say, that the UK tax system actually like discourages you from actually making it. Because you sit down and you think, okay, you want to be that vice, you want to be the CEO, you want to be a senior in your workplace, and it comes with a comfortable salary. But once you get there, 50% of it is going back to taxes. So why would I want to push to hit that when I could be middle class between that, the the additional rate tax bracket or the basic bracket, and I get my 25% taken at the end of the month. It's better than losing basically about 50% of what I've put in.
What you've put in.
So I think that's where the argument comes in, that okay, as much as this, yeah, it's your fair share because you have more.
Yeah.
Is it not discouraging to then
Of
say
course
that
it would be.
I've worked so hard to have the nice things, as Ivy said?
Yeah.
Even the nice things are being taxed.
Yeah.
So where does it then become fair and actually encouraging to an individual to actually work harder?
I mean, life isn't fair, number one. Okay. So I don't know if we're ever going to get fairness. Okay. So if it's fairness that you're looking for, forget about it, essentially. Because right now, there's so many things that, like, the government are doing. Like, for example, normally business owners that are like CEOs, when they pay themselves a salary, they now often opt into doing dividends. And things like dividends, so normally you used to have 1K, you get 1K of your dividends that's tax free. £1,000, nice, isn't it? A little bit of money, free money. We know that £1,000
it's going like
money.
This.
Like,
that's
it's
not money at all.
So that's completely tax free. But I believe next year they're actually even taking off that 1K that's tax free, and everything is going to be taxable from the zero of your dividends. But then even if you now look at self assessments, by the way, this is actually so bloody funny. I can't lie. Listen. So say you have savings now. So when we're doing a tax return, we have 3 different columns. Okay. We have NSI, which means non-savings income. So that's like your salaries, rental income. So if you also have a property on the side that you're renting out, that's also put into that self-assessment. So we're taxing that too. Right. You have your rental income and any other like side hustles that you're doing. All of that would go into there. And then we've got what we called savings income, which is the SI column. Savings income. So if you have savings and you're making interest on your savings, that gets taxed.
Right. Okay. Just so that we're all up to speed with what you're saying.
Yeah.
I have a Halifax account.
Yeah.
I've decided, you know what? My parents have gifted me 5K for my birthday. Yeah. I'm going to put it into an ISA account. Yeah. And I'm going to incur some interest. Yeah. Once the interest incurs, I have to pay taxes.
You have to pay tax.
So money that was given to me as a gift. Yeah. That I've put in as an investment.
Oh, you don't even want to get into inheritance tax. Okay. So don't even talk about money that's been given to you as a gift. Because inheritance tax, so like that's if maybe like your parents maybe sadly passed away and they pass over like money, estates to you. That stuff can get taxed at nothing less than 40-50% for somebody just passing on your wealth to you. So we shouldn't even go into we shouldn't even go into that aspect of things. Right. But yeah, your savings income is also getting taxed, and then on top of that they have a column for dividends. So then your dividends are getting taxed. Right. Your savings income gets taxed at the same rate as your NSI, your non-savings income, which is your salary and stuff. And if your savings income is a lot, it will essentially take you up a bracket. It has got the ability to take you up a bracket. And if you then get dividends, that can also take you up brackets. So, by the way, your tax bracket is not just on what you make in your salary. It's all the money you make. Whether you're a trader, whether you're somebody that sells stuff on eBay, all the money you make is what determines your tax bracket. So, not just that salary that you're getting.
Yeah. I think someone said... Inheritance tax. Why would I declare that?
To transfer estates, you have to your solicitors. You've got to go to accountants to transfer like huge wealth. You would need to go to someone professional, and you would have to declare pay tax on it. To transfer, sign it over into your name and things like that. You have to pay tax on it.
I think that's crazy because then it poses the question that as much as being in the UK, we've questioned and we said, okay, can it make us broke? Mm-hmm. Does that mean that being in the UK, you can actually never be financially free? Because it's seeming like to me, every bit of money that I make,
they do
being taken by the tax man.
Okay, they say that if you want to get rich, you should have 7 streams of income.
Okay,
so
but
if you're going to have 7 jobs, then I don't know, because ain't no one going to have 7 jobs.
No one is having 7 jobs.
I don't know. You can't get wealth.
But let's be honest. Even with that, you're saying with the 7 streams of income. Yeah. If I've said, okay, my main stream is me working, then I've got
the mainstream can't be you working. By the way,
one of the streams is me working. Then I've got a side hustle side hustle, which is probably, let's say, selling stuff on eBay. You know. Then I've got a rental property. Yeah. Then I don't know. Let's say I've put money into a business. Yeah. All those different hustles, all those different streams of income. there's no way to avoid being taxed on all of them.
Yeah, you'll get taxed on everything.
So then, that's really the question. Is the UK tax system made to make us broke?
Yeah, it is. It is. I don't think you can it's made to make you broke. You know what? I don't think it's made to make you broke. I think it's made to keep everyone in that middle class level. So they don't want people to enter that 1%. So, everyone has this dream of becoming the 1%, the people that are right at the top.
Right at the top.
Yeah.
The
in order for you to become that, it's going to take a real fight. In order for you to become middle class, working class, they're basically saying everyone can be middle class, working class. You can just all sit there. So essentially what they do is they charge the people that make less money less, so they tax them less, so that they can keep more of their money and end up in this like circle. But then the people that are making a lot of money, they tax them more so and bring them down into that circle. So it's like the aim is to kind of just keep everyone in this
bracket, in this margin of money.
Yeah, exactly.
So as well as it making it seem like we're broke, it kind of also discourages people from wanting more. Because I think for me, the UK's tax system's not going to stop me from being broke, from being rich. That's the truth. I'm still going to make my money. Still pay my taxes, but I'm still going to make my money. But for someone who may not have that same drive and may not see themselves getting to that 1% or getting to that point, wouldn't it just mean
the thing is, like, I know we have the conversation on, is this fair? We're paying money for the poor, but there will always be the poor. And like, it's not going to change, because if we talk about the rich, it's not ever really it's about a mindset. And honestly, I just think there's just certain people that cannot grasp that mindset, because it's very painful. Like, in order for you to enter that upper class of people,
they're moving to Jersey.
Yeah, because it's a tax haven over there, isn't it? So like, to get into that sector, it's gonna take a lot from you. It's gonna be very painful. I think I watched a podcast and they were saying like you have to become comfortable with chewing glass, like eating glass. So that's like, the rich become so comfortable with discomfort that's what gets them there. But there's certain people that just don't have the capacity to become that. And is that their fault? No, it's not. Like, is that a problem? Some people don't. There's actually some people that say that they don't want to be rich, by the way. Some people just want to live a normal life. They're fine with that. So I mean, I think it's more just like, I feel like as well, once you kind of hit a certain level, it's like, even whatever you're paying in taxes, like, financially free, you won't even be able to, as much as you don't want to get taxed, you're financially free. So that tax is not really going to affect your everyday living, because what we also have to consider is how much, so people always say, oh, it's fair for the wealthy to like, to pay more tax. But then remember, like, their living costs are way higher than the ordinary person.
But that's like, a choice. They've chosen. They've worked hard to get there. So of course
they have chosen to do that. But then we all, like, you hear all of these podcasts. Wealth comes from exposure. Wealth comes from a mindset. Wealth comes from many of these different things. So as much as it's a choice, it's also not a choice, because in order for them to become wealthier and wealthier, they need to pay more and more money to become more and more exposed to many different places. So it's like they have to almost live in this kind of fake wealth to kind of break through to another wealth, if you kind of understand. Because think of it, like, in order for us to grow as a practice, we first of all had to like kind of expose ourselves to the industry a lot more. And like, I think we were having the discussion the other day where like, okay, we see people who have maybe more followers than us, but in terms of like their face being noticed in the industry, it's not that noticed. And that's because it is not like, it's not easy to grow followers on Instagram, but it's a lot easier than going and actually making your face known in an entire industry, because that's going to take a lot of fighting. It's going to take a lot of courage. It's going to take a lot of boldness. It's going to take a lot of consistency. But the thing is, like, they have to they have to live a more expensive lifestyle. You imagine like us living in a council house, but we're building like a $1 million business.
It's
like
not gonna work.
you're stuck. Your mindset will be stuck in the blocks.
Yeah.
Like, do you get what I'm saying?
Yeah.
So it's like, as much as we can say it's a choice for them to live higher lifestyles, it's also part of what actually makes them wealthy. Do you understand what I'm saying?
I get you.
So it's not really a
get
choice.
you.
You have to go to like better restaurants because you're trying to make more connections. You have to pay more to go to events that may be like closed off or private member clubs because you're trying to become more wealthy. So as much as it's a choice, it's not really a choice. It's also a cost of actually becoming wealthy.
But then if I totally agree, and I totally understand where you're coming from. But then it drives me back to the question of, yes, they have higher living costs. Yes, it's more expensive for them to live the way that they've decided to live, or the way that their lifestyle calls them to live. But why does that in turn have to mean that they're taxed nearly 50% of what they make?
Yeah, of
because
course.
In order for them to even make that wealth,
of course, the government are they're being dramatic. They're being over the top.
I think dramatic is the best.
They need to chill out. They're
Yeah.
greedy. They're greedy. That's what they are. Because the truth is, I don't see why somebody's personal allowance needs to be taken. Like, I see, why not give everyone a personal allowance? So what,
Regardless
if
of how much you make.
Yeah, regardless of
You
how much
should
they're
be.
making, that first 12,570 should be tax free.
Yeah.
Whether they make more, whether they make whatever, it should be tax free. Like,
I totally agree
let's
with
leave
you.
it as that.
I
Why
totally
do they
agree.
then decide that over 100,000 we're going to start reducing that? It's all to do with this equilibrium stuff. It's all to do with not letting people reach the elite class.
Yeah.
Yeah.
Whew, I don't know. I feel like delving into this then opens up the questions of, like, I think there was one article that I read that, okay, once you reach a certain tax bracket, then they should be disqualified from getting those free services from the government. So things like the NHS,
Yeah.
things like free childcare or free schools.
Yeah.
Because I was in two minds with that. Because the truth is, being wealthy, are you really going to see Richard Branson go to a normal public
Yeah, you're not
hospital?
going to see
You're not going to see
in
him
St.
there.
Thomas's.
You're not going to see him in
Queen
St.
Eli-
Thomas's
Queen
or
Elizabeth.
or Queen. None
St.
of them.
George's.
Newham General. You're not going to see.
You're not
You're not
gonna
going to see him there. A lot of these people, once they reach a certain tax bracket, there's just things that they don't subscribe to.
So even the things that they're getting taxed for, they don't even
They don't use.
Yeah.
So should it be a conversation of, okay, once they reach that, then those things are taken away from them, and they then have more money to put towards the things that they are actually spending on.
That will be difficult to say, because at the end of the day, when we're paying taxes, it's not like we know exactly what part
It's going
of
to where.
the system we're paying for.
Yeah.
Because there's things like defense. Maybe their kids will go to private school, so maybe they won't use schooling.
You should pay less tax the more jobs you create. Incentives. I think that's very smart.
Yeah.
Honestly, I do think that is a really, really good incentive, because if I, as an employer, have given opportunities to 15 people to work, obviously they're paying their tax, they're paying their NI contributions, their pensions, also all those things. Why should I still be getting taxed 50%? Because that's job creation. I'm
Yeah, but
putting
then
money into the economy.
You wouldn't be getting taxed 50% though. So if you are giving people...
I don't mean you'll still be getting taxed, but I'm still making a living. I'm still getting my income.
Oh,
but
you're still working at the same time.
Yeah, that's still being taxed a certain amount.
Yeah.
As a CEO, like you mentioned, okay, we're the CEOs. We have a certain salary. We have the incentives of a car or a house.
Yeah.
I'm still getting taxed on that.
Yeah.
But then I've given 15 people opportunity to work.
Yeah,
And that's boosting.
that's giving you more tax.
Exactly.
Yeah, so
I think that's a very, very good incentive.
It
I'm
is
not
a
going
good
to lie.
incentive. It is a good incentive, and the government are trying to give more incentive to get. To be honest,
They're not trying.
They're trying,
They're
but
not trying.
it's not good enough.
They're
That's
not
the truth.
trying.
It's not good
They're
enough.
not trying. They still have this mindset that a certain class of people should stay that, and that everyone else should be in that middle bracket. I think that's bottom line. So the question is, the tax system made to keep us broke?
Yeah, because It's definitely very limited. Very, 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 very limited. Yeah, and I agree with you, Riches for War. The US definitely has better tax incentive. US definitely has better tax incentives and things like that. But the truth is, at the end of the day, this is the country that we live in. A lot of people come to us and they're like, I just don't want to pay tax. You cannot not pay tax. And people think that tax is like there to benefit us. It's not there to benefit us. It's there to take from us. So as much as it's like, what tax benefit? There's no tax benefits. There's hardly any of them. So if we want to delve into the conversation more on how do we save tax, we can talk about that. I think somebody mentioned offshore accounts. Yes, a lot of people do offshore accounts. Not for somebody that's employed, but if you are a business owner, then an option is an offshore account, registering your business in a different country. Also, but then
there's so many implications that come with
complicated. Like, depending on your residency, you will still get taxed in the UK.
I think
there's many
loopholes, but there's so many different implications and regulations. Like the UK government has made everything so tight.
Literally
everything.
Yeah, because even being a business owner, because we're talking as a tax system as a whole. Like, okay, it definitely caps you as an employee, but I don't know how much it even aids you as a business owner. Because trust me, like, I have some startup businesses, or we have some startup businesses that we work with that is like, they're actually making money, and now they're getting to a point where they need to pay VAT and stuff like that. And then you see their profits like plummeting again, because it's like now they're making more money. They need to pay back more money, and
it's like you've seen them work for years to get to where they are. Some of them started through COVID, and they've pushed 4 or 5 years to get their business to a certain level where it's very hard to even break even as a business owner. Let's be real. We see so many businesses that at the end of the year, they've literally scraped making a profit. So once you finally get into those positions, and it's like, okay, no, you're making a bit of money, you're pushing, the tax man just says, okay,
bring it to me.
So it's like, okay, employee, entrepreneur, which one can actually really...
Definitely, entrepreneur is definitely way better than being an employee.
100%.
But it does have its own costs as well. Because as well as the taxes, you also have to pay an accountant. You have to pay an accountant to do your books. You've got to pay for marketing. You've got so many other expenses that you have to pay for. So I think it's actually even, like, as much as we make the tax system, like, we're looking at, this tax system is a disadvantage. It doesn't give us much incentives. Like, to get rich is actually even way beyond this tax system. Like, you have to be a very resilient person, because even beyond the taxes, there's so many other expenses that you will come across. Like, there's rent. These expenses are allowable. We can deduct them in terms of when we're filing, but the thing is, they will still be expenses, and they will still eat from your turnover. So where people sometimes are like, my business is making 500k, but you don't see a penny of that at the end, because of how much expenses you're coming
out of the business,
how much you're paying for, like, all the different things that you've got to pay for. Like, marketers are crazy expensive. I was about to swear, but marketers are crazy expensive. But tell me a great business without some sort of marketing. You get what I'm saying? So, definitely, I don't think the UK tax. To be honest, I don't know if anywhere is really made to make you rich. I think it's all about the individual. Like, way more than whether this, like, you're not ever gonna get rich off of a system that has been created to accommodate all types of people. If you understand what I'm saying, because you can't better one people
without affecting
the other. So it's like, because it's a system, you're gonna find that it's not ever gonna give you what it is that you're wanting. You're gonna have to take yourself out of the system and almost create your own system in order to actually get that wealth that you're looking for, sort of thing.
Wow, I think the conversation has been very interesting. And I think we've got quite a few questions that have come up on the stream, and even questions that were sent prior to us coming on today. So I think one of the things as well that was a question that a lot of people were asking is, how can I make my taxes work for me? Like, how can I still pay my taxes but still get a good amount?
I mean, there's a few ways. So
but I think we'll take a break.
Okay.
Before we get back into that question.
Okay, so just a quick video.
Yeah.
Okay. Hi, I'm Corinne Kobe Jackson and I am the lead accountant here at Accounted. I do everything from account filing, payroll, bookkeeping, filing your VATs, everything you need accounting wise and business advisory